Welcome back. Let's just put the spotlight on some more mid-cap companies. Paper continues to be right on top. JK Paper, TNPL, very large volumes. Look at the volumes in JK Paper. Volumes are in excess of 1 crore shares. The stock is still about 25% away from its all-time high levels, 52-week highs, but 13% up on that. Throw in an Andhra Paper, that's also doing very well in trade. Orient Paper and Industries has got a 6% up move. You've got Cross, which is seeing a lot of buying, 8%. Nugent Software is soaring. Munjal Auto has a near 7% up move. In fact, with mid and small cap IT, you have Sonata Software also fairly active, and Jindal Stainless is another big mover in the mid-cap space. But let's bring our viewers deep insights. Today, we're starting a special news segment. It's called Under the Lens. It's basically a deep dive into the business model of one company. And the company that right now we have is Rishabh Instruments. Remember, it's not a recommendation. We're just trying to analyze the P&L, the balance sheet of the company, and tell you more about it. Sonal is now at the big wall with the details.
Thank you so much for that. Rishabh Instruments, that stock has seen a sharp rally this month. The stock is up nearly 50% in July, is now hovering close to its 52-week high as well. But despite the gains, it still trades below its listing price of 460 on the NSE. So what's driving this move? Rishabh Instruments is a manufacturer of test and measuring instruments along with industrial control products like temperature controllers, current transformers, etc. Its products find end users across data centers, petrochemicals, telecom, pharmaceuticals, and even railways. These are few sectors it caters to. The company has a global footprint with 5 manufacturing facilities in India, Poland, and China, and modification centers that it has in the US and the UK. Interestingly, Europe alone contributes more than 70% of its total business. Now, let's take a look at the numbers. In the first quarter of FY26, revenue came in at 190 crore rupees, which was up 12% on a YOY basis. EBITDA surged more than 3.5 times to 28 crores, while profit after tax jumped 5 times to 20 crores. Margins too, they saw a sharp increase, expanding to nearly 15% versus just 7% for the full year of FY25. Now, management attributes this improvement to stronger performance in both domestic and export markets, a turnaround in its Lumil Alucast die casting business, and better inventory management, where inventory days have now come down to 3 months versus 6 to 7 months earlier. Company has made 6 acquisitions in the last 12 financial years, globally to de-risk supply chains and also for cost competitiveness. Now, looking ahead, the company is guided for 100 crore EBITDA in FY26, expects the electrical and electronics business alone to clock revenues of around 450 to 460 crore rupees. It also plans to scale up its US business from about $2 million currently to $4 million going ahead. But of course, there's a risk with the US business, right? Tariffs play a key role in exports. There is a 15% duty from Europe to the US, which is okay. But from India to US, we have been talking about that possible 50% tariff. A 25% tariff, the management says, is manageable. But a 50% duty from India to the US could force the company to manufacture in Europe for American exports. On the financial side, the company's revenue has grown steadily over the last few years from 470 crores in FY22 to 720 crores in FY25. But profits have been volatile, with PAT falling from 50 crores in FY22 to just 21 crores in FY25, though the latest quarter suggests a rebound. Returns have also moderated. ROCE has slipped from 14% in FY23 to 5% in FY25. Now, the company has not declared any dividends so far, but they do have a decent cash in the books at around 190 crore rupees, working capital days at 76, lower YOY due to improvement in inventory days. The cash conversion cycle, that is at 165 days. As for ownership, promoters hold close to 70%, while mutual funds like Quant Small Cap, HDFC Dividend Yield, and Nippon SMA are among other investors. Finally, valuations remain steep. The stock trades at about 71 times FY25 earnings. So these are just some facts about this buzzing stock of late.
Thank you. And once again, to reiterate, this is not a recommendation from CNBC-TV18. It's just putting Rishabh Instruments, which has seen a fantastic run-up in the recent time, under the spotlight and telling you about the company and the numbers.